Bob Dahl, Crossmark Global Investments Chief Investment Officer, and Ernie Tedeschi, Yale Budget Lab Director of Economics, joins us this morning. Ernie is also former Chief Economist at the White House Council of Economic Advisors. Guys, happy Friday. Great to have you with us on an eventful week. Bob, the list of bull food is long, as Sarah was pointing out. Seasonality, Fed cutting with stocks at all-time high, double-digit earnings growth, tax cuts, deregulation. Is the risk that the economy gets too hot, or is there risk at all?
Yeah, there's always risk out there, Carl, as you know, and you just mentioned double-digit earnings growth. Well, the consensus now for this year is down to plus 9%. It was not that long ago, plus 12 for quite some time. So estimates are coming down a little bit. If you're asking me to be the bear, I'd also throw only 12,000 new jobs last month, got overshadowed by the election when it was released last Friday, and the prior 2 months revised down by 130. So, yeah, the tailwinds are good as a result of the election, but it's not a perfect world out there, and valuations suggest it better be close to a perfect world.
Right. Ernie, there is the additional bull argument that hiring and CapEx was waiting for the election to pass, making sure we didn't descend into civil discord, and now that that's done, you know, you've got a green light.
Yeah, so I think that in some ways this was a risk-on outcome in the election. So we're not going to see the electoral risk that some had feared. I think 2025 in many ways will be bullish. But there are some medium-run headwinds that remain to be seen. So I think in terms of fiscal outcomes, this was the worst outcome for markets, having unified control. You know, it's the worst for fiscal discipline. And I think that that's what you see in bond markets right now with rising yields. They're worried about fiscal deficits rising, and they're worried about unchecked fiscal legislation coming out of Congress. They're also worried about the direction that tariffs are going to go in Congress and out of this administration. So I think that there's still a lot yet to be seen coming out of this administration, and markets are in a sort of wait-and-see pattern right now.
Ernie, you know, I don't know that there's been any work done on this specifically in terms of this campaign promise of mass deportations and what that would mean. But, you know, I know the president-elect has reiterated that, I believe, to NBC News as recently as last night. Do you have any sense for if, in fact, that were to be the case, and we're talking, you know, many millions of people conceivably, what the impact might be?
Yeah. So, look, you're talking about literally reducing the capacity of the American economy. I think what is often not appreciated by people who advocate for that policy is that, you know, immigrants in this country support the businesses of native-born workers as well. If I run a construction business and I depend on immigrant labor, I can't run my business at all without that labor. And if those workers are deported, then I have to lay off my native-born accountant, my native-born manager, and I have to close down my business as well. You know, and immigrants provide both supply and demand to the American economy. So it's one of those cases where the medicine might be worse than the disease in that case, and that's a whole separate question from the immigration system itself, which clearly needs reform, and really needs some bipartisan focus over these next 4 years, and I hope it gets it. But just in terms of the economics, it would really be devastating to this economy if deportation were the policy being pursued.